Hello again, guys. It's Trevor at Heritage Reverse Mortgage. I am a reverse mortgage specialist. Now, my article today is in response to a lot of questions I've been getting this week. Today is August 2nd, 2019. And earlier this week, the Federal Reserve announced a cut in the Fed funds rate. And so a lot of my clients and people have been asking me, well, what does this mean for me? What is this going to do to interest rates? And my answer is, it's not going to do anything, at least not directly. And the way the media talks about these kinds of rate cuts, it makes people think that, man, I need to know what's going on here. This is going to be huge for me. And that's what I want to kind of clear up today is, no, it's not. The important thing about a Fed rate cut or a Fed rate hike isn't what the Fed is doing, it's what the Fed is saying in what they're doing. And so let me kind of explain that to you today. So let's start by explaining what is the Fed funds rate. The Fed funds rate is the interest rate at which banks borrow money from the Federal Reserve. And so most people would look at that and they think, well, great, if the banks are borrowing money at a lower rate, well, then I should be able to borrow money from my bank at a lower rate. And that's actually not the case. Generally, what I've seen is that when the banks are borrowing money at a lower interest rate, that just means they're borrowing more money. They want to borrow more money and lend more money to the public to help drive the economy, to help boost the economy. That's kind of the point of doing this. It doesn't mean that you'll be paying less for the money you're borrowing. It just means that there's more money to borrow. And generally, lending guidelines will loosen up in this situation. And so how does the Fed funds rate affect you personally? As I mentioned, it's not about what the Fed is doing, it's what they're saying. And so what is the Fed saying? If they're lowering interest rates, what does that mean? Okay, well, let's look back in time. The last time that the Fed lowered their interest rate was 2008. You remember that date, right? It was a rough year, the Great Recession, as we've come to know it. And so the reason that the Fed lowers their interest rate is they're trying to bolster a weak economy. The Fed is saying that if they're lowering the interest rate today, that means that the economy is weakening and they're trying to avoid a recession. Okay, so what does this mean for you personally? Now, in the article, I give an example of an investor. Let's imagine you have an investor and he's got $100 and he wants to invest this money. Now, in general, this is how the financial markets work, and this is a very simplified explanation, of course, but this investor has two buckets. On this side, he has the stock market, which has, high returns and high risk. So he knows if he puts his money here, he could get a lot of it, but he could lose all of it too. The other option is the bond market. The bond market has low returns, but also low risk. And so as he's choosing, well, which bucket should I choose? It really depends on what the economy is doing. If the economy is strong and stocks are doing great, of course he's going to put his money into the stock market. But if the economy is weak, then he's going to take his money from stocks and he's going to put it into the bonds because there's lower risk. And that's exactly what happens. You see, the bond market is what drives the interest rates that affect you personally. Mortgage rates, auto loan rates, student loan rates, all of these are driven by the market, by the bond market. And so what happens is when we enter a recession or a weak economy, investors are taking their money out of stocks. The stock market will go down. They put their monies into bonds and bonds will go up. And the fact that bonds are going up is what drives your interest rates down. And so, as I've said in previous weeks, yes, we are heading for a recession. Yes, the stock market will go down. Yes, interest rates will also go down. And so don't be afraid of this. It's happening. It's going to happen. It's happened for the past 300 years, 250 years in our country. It's what happens, right? And so don't be afraid of it. Take advantage of it. So refer back to some of my earlier comments or my earlier blogs and articles if you want more information about what to do in a recession to benefit yourself financially instead of being a victim. And if you have more questions about the Fed funds rate or interest rates in general, mortgages, reverse mortgages, I've been in the business for a long time, and so I'd be happy to help you. And of course, give us a call, look us up at heritagereversemortgage.com. My phone number is 435-359-9000. I'll talk to you soon, and have a great day.